Okay, welcome back to the second aspect of our solution concerning the objective test November 2011 financial accounting question. We ended in question number 10. We are continuing from question number 11. So let's get started. A statement which proves the arithmetical accuracy of double entry in the ledger is, double entry has to do with recording a transaction in the books of the business at least twice. So every transaction should be recorded at least twice in the books. So what it means is that at the end of the day, the debit side and the credit side of the account should be the same. So the debit and the credit, they should be the same. That's why you have what is known as balancing of an account. Okay, so the question is saying that which of these options tells you that what you've done or the recording is right, or whether you've obeyed the double entry principle. So let's go through. Balance sheet, no. Balance sheet, even though the balance sheet can also give you a hint, but that's not the first thing that you should do or to know. The balance sheet is always prepared at the end of the accounting year. So even though it could be the answer, but that's not the appropriate answer for that. The balance sheet always shows the financial position of the business. Okay, it's help to know the affairs of the business in terms of assets, liabilities, and profit and other stuff. Okay, so option A could be the answer, but that's not the appropriate. If you choose, you'll be marked down. So let's go to the trial balance. Trial balance, yes. The trial balance always will give you, because at the end of the day, when you are done with the balancing of an account, the next thing to do is to draft your trial balance. So if the trial balance, the two sides are not the same, it means there's something wrong with your entries. So the answer here is B. So the trial balance always shows the arithmetical accuracy of double entry in the ledger. Okay, so question number 11 is B. Okay, so don't forget that is B. Write it somewhere. Okay, question number 11 is B. Let's move on to the next aspect of the question. Examples of intangible assets are what are intangible assets? Intangible assets are the assets that you cannot see and touch, something that you cannot see and touch. So what the next option, which of them belongs to intangible assets? So let's see, land and patents. You can see land and touch, right? But can you see patents? No, you cannot see patents. It has to do with trademark and those copyright issues. Okay, so it's something intangible. So the land doesn't meet the requirement, but the B, which is the patent, meets the requirement. So the land, the inclusion of the land has made everything to be wrong, because you can see land and touch. So land cannot be an example of intangible assets. So option A is out. Let's move on to option B, stock and debtors. We can see stock and touch. If you have goods in your business, being it let's say some equipment or that you do in you buy and sell, or maybe there are foodstuffs that you buy and sell, you can see and touch. All these things are known as what? Stock. But debtors, can you see debtors in our books? We cannot see debtors and touch them, even though debtors could be a human being, but we don't put human beings in our books. Okay, we just open an account, so we cannot touch debtors, but we can touch stock. So because of the introduction of stock has made everything to be wrong. So option B2 is out of contest. Let's move on to cash and bank. Cash and bank, you can touch cash. Okay, physical cash you can touch. Yeah, you can touch cash. Yeah, so and bank too, the money that you've deposited in your bank account. If you open bank accounts, have money in them. So that one, because of the cash that we've seen here, has also made everything to be wrong. Option C2 is out of contest. Let's move on to the last aspect, which is D, patent and trademark. So as I said, patent and trademark has to do with those copyright and other stuff, but we cannot see them. They are assets that helps the business to get more revenue or sell its product. And you all know that asset has to do with anything that has the capacity to generate income to the business, and the business has control over them according to the accounting standard, or according to accounting standard board. The definition for assets, these keywords are there. So we can say that patent and trademark is an example of intangible asset, because we cannot see patent and we cannot see trademark too. How can you see the trademark of a business? You can't see it, okay? But they help in generating a lot of revenue for the business. So the answer for question 12 is D. So question number 12. Question number 12 is the D, okay? Write it somewhere, okay? Is D. Let's move on to question number 13. The working capital of a business is, so how do you get the working capital of a business? You can usually get it when you are done with your balance sheet, okay? And you have a formula for that. What's the formula for working capital? So let's see. Let's do it somewhere and see working capital. So working capital, okay? Working capital is equal to current assets minus current liabilities, okay? So this is the formula for working capital is current assets less current liabilities. So let's go to the options if it is there. So that's the formula that I've given to you. So working capital of a business is total asset less total liabilities. Does it meet the formula? No. The option B is current asset less current liabilities. So does it meet the formula that I gave it to you? Yes, because working capital equal to current asset minus current liabilities. Okay, so the answer for question number 13 is option B, current assets less current liabilities. Okay, I hope you are following. So that's the answer. If you don't know the formula for that, write it somewhere, because this thing you can, it appears almost every time in final exams. Okay, put it in your head, or you can write it somewhere. Question number 14. Question number 14. Another name for authorized share capital is what? This has to do with company's account. Okay, what is authorized capital? Authorized capital is the one that has been registered and the company has the right to issue them to the public to subscribe. Okay, so simple put, authorized capital, share capital is like the capital that the company has registered and has the right to issue them to the public for subscription. Okay, so let's see option. So another name for authorized share capital is what? Called up capital. What is called up capital? You know, when the company issue shares to the public, they have first call, second call, and those kind of stuff. They don't, some of the companies, they don't take the money upright. They give them some time for the subscriber to pay them. So called up capital has to do with the number of times a company calls its shareholders to make payment to the shares that they've subscribed. At times they have first call, second call, and third call, and so ever. So called up capital can never be another name for authorized share capital. Okay, then you have the B, on called up capital. So it's just like opposite of called up capital. The shares that has been issued to public by the company has not called for payment. So it could be second call or something like that. Okay, and registered capital. So as I said, another name for authorized share capital could be registered. Yeah, because when something is authorized, it means you have the right to sell them, and before you can have the right, you should have been, or you have been given the mandate, or if registered the the shares. So it has become your bona fide property, and you can issue them to the public for subscription. So we can say that another name for authorized share capital is registered capital. Okay, but if you consider the D, issued capital cannot be another name, because issued means if just the company has, let's say, given them to the subscribers, they've issued the shares that they indicated the interest of buying. Because when the company make an advertisement concerning their shares, the shareholders, the upcoming shareholders, will show an interest, or they will bring an application for them to be given the shares, and the company has to go through, or they have to scrutinize those applications to see if the application meets the requirements concerning the shares. And anytime that the requirements are being met, the company will take steps to issue the shares to these subscribers. Okay, so issued capital means those applications that the shareholders brought it, the company has issued the capital to them. Okay, has issued the share to them. So issued capital can never be another name for authorized share capital, but rather a registered capital could be another name for authorized share capital. Okay, this is under company's account, and we have so many, I've mentioned so many terminologies there. If you've not gone to that part, don't worry, you shall get there, and we will know what it entails when we get there. Okay, so the answer for question number 14 is D. No, sorry, it's C. Okay, it's not D, C. Question number 14, the answer is C. Okay, the answer is C. The answer is C. Okay, let's move on to question number 15. Which of the following is not a cause of disagreement between cash book and bank statement balance? You know, this one is under bank reconciliation statement. At times, the balance that you have in your books is quite different from the balance that you will see on your bank statement when the banks or your bankers gives you your statement concerning your bank account. At times there is a difference, and you have so many reasons why those balances would not be the same, or there might be a differences between them. So what are some of these things that can cause this disagreement? Okay, we have so many of them, but the question is in which of this or which of the following is not. So the key word here is not. So which of these will not cause an disagreement between the two? So cash lodgement. What is cash lodgement? Cash lodgement has to do with maybe keeping cash in your office, or maybe there are so many departments in the business, and at the end of the day we have a central account or a place where cash can be kept. So if you have cash lodgement in your department or in your business, this one does not has to do with, or does not have any relationship with your bankers, or does not have any relation to do with your bank account. You just keep the cash safe in your business. So it's not a matter of, or it's not a way of recording it or maybe keeping it in your bank account, but rather keeping the money safe in your office or in your business. So this cannot be a reason why there will be a difference between the bank statement and that of the cash balance, okay, or the cash book balance. But let's see what is this annual check. This annual check, maybe you've given a check to your creditors. You've given them for them to go and withdraw the money, but when they went to your bank, due to one or two reasons, the bank couldn't, or the creditors couldn't withdraw, or they were not given the money due to one or two reasons, and because of that, your account was not debited. But you've already credited your bank account in your cash book, because you've issued a check out thinking that the creditors will go and withdraw the money. But when they went to the bank, the check has not been honored, it has been dishonored due to one or two reasons. Maybe you didn't have enough balance or any other factors, and the creditors has not given you a notice of that. They've kept the check somewhere, so you don't have any idea of what happened. So if you've not taken the consideration of the dishonored check in your records, so at the end of the day, there will be a difference between your bank statement and that of your cash book balance, okay? Because you are not aware of the dishonored check. Let's see, uncredited check, okay? Maybe you receive a check from your customers, the goods that they bought, they've given you a check, okay? Maybe your customers, they have too much money, so they've given you a check. And then you've already credited you've already debited your cash book. If you already credited debited your bank account in your cash book, but you've sent to the bank for them to credit your account, but your account has not yet been credited, or maybe the check has not gotten to the banks, or the bank has not received any information relating to that check, and because of that, your account has not been credited with such amount. You've already recorded the check in your cash book account by debiting your bank account in your cash book, but the bankers have not received any information relating to that check, so they've not credited your account. Because if you send any check for them to add it to your bank account, you have to credit your account, right? The bankers have to credit your account, and you have to debit your bank account in your cash book. But because the bankers, due to one or two reasons, maybe the check is still in your drawer, you've not sent it to the bank for crediting. If you keep it in your drawer, the bankers will not get to know of it. If you don't give them any information, they will not get to know of it. And because of that, there will be a difference between the cash book balance and that of the bank statement balance, okay? And then standing orders. Standing orders has to do with maybe giving your bankers authorization to make some payments on your behalf, being it electricity or utility bills, any other expenses, or it could be a school fees or something else. Whenever they make such payment, at times they might not notify you about the debiting or the transaction that they've made on your behalf, and you might be also not be aware, or you might also be forgotten about the instruction that you gave it to them. So you forget to debit, so you forget to keep your transaction update in relation to the standing order, or you might not give attention to the standing order that you've given to your bankers in relation to the payment that they have to do it on your behalf. At any point in time when you give such order, the bankers, they will do it as you've directed them to do. But because maybe you might be busy or you might forget it, you will not take records of these things. So the balance that the bankers will give it to you concerning your bank statement will be different from the balance that you have in your cash book balance. You could see that the three items over here can or will cause a difference between the bank's statement and that of the cash book balance, okay? But the first one will never cause something like that. So you could say that the answer for question number 15 is A, cash lodgement. So the question is, which of the following is not a cause? So the key word is what is not. And we've seen that these three options, dishonored check, uncredited check, and standing order, will cause a difference between these two accounts, okay? So question number 15, the answer is A. Don't forget that, to write it somewhere. But if you have different opinion, you can let me know, okay? Let's move on to question number 16. Question number 16. A limited company has no, so we are saying that a limited company has what? Has no separate identity from its shareholders. Are you true? No. Once a company is registered, it is seen as an artificial human being, which is different from its owner. So the option A is out of contest. B, let's see, no separate identity from 8 directors. This one too is just similar to the first one. Is separate from the directors, okay? Even though the directors will act in accordance with the rules stipulated in the business or according to the company's act. So there's a separation between the identity of the directors and that of the company. So the directors will transact business in the name of the business. They will transact business in the name of the company. And if the director does something out of the context or out of the stipulated rules, it will not be considered as a transaction relating to the business, okay? So never forget that. So the C is separate capital from its shareholders. It has separate capital from its shareholders. Yes, this one will be the answer, because when a company is registered as a limited liability, okay, it's limited. It means the liabilities of the owner or the shareholders is limited to the amount that they've contributed towards the running of the business. So if the shareholders, or if an owner of a business has, let's say, bought a share costing 20,000 in the business, it means the liabilities of the owners is only limited to that 20,000. So if the business goes into a bankrupt, only the amount that the owner has contributed will be used to defray that amount. And if that amount cannot be used to settle that bankrupt or that liabilities, it means the owner's private properties can never be touched, or it cannot be used to defray that debt. So we can see that a limited company has a separate capital from its shareholders. What it means is that the private properties of the shareholders cannot be used to defray the debt of the company, because they have a separate capital from each other. Okay? The other way around, go for the unlimited. The unlimited, that one they can even sell your you, the human being, to defray the cost. Okay, that's just by the way. So the unlimited aspect, your personal property can be used to defray the debt. Okay? When it comes to the limited, you only lose the interest that you've contributed towards the business. So option C is the right answer for question number C. So question number 16 is C. Okay, the answer is C. Let's move on to question number 17. Okay, when the total purchase price is less than the new valuation of the asset taken over, the difference is treated as. This thing is, I think, is business combination, or when you buy a company, and the purchase consideration or the purchase price is the amount that you paid in exchange of taking over the company, of taking over the assets and the liabilities of a particular company. So let me say it is the price that, or the price at which the company was sold at. That's what is known as the purchasing price. Okay. And when the new valuation of the assets taken over, so when you take over the company and you've made valuation of an asset, the difference between should be treated in a certain way according to the accounting rules. So the question is saying that when the total purchase price is less than the new valuation of assets taken over, the difference should be treated as what? So if the valuation is more than the purchasing price, yes, we could see that there's kind of profit or something like that. You could see that. But how should we treat that one? Should we treat it as a profit? Should we treat it as a revenue? Should we treat it as capital reserve? According to the accounting standard or concerning business combination, when you get there, you shall get to know about them. Okay, especially when you go to higher institution. The accounting standard concerning that is saying that we should treat it as what? Capital reserve. We should treat it as capital reserve, not revenue reserve. Okay, not as profit, not as goodwill, but as capital reserve. The goodwill will come in when the purchasing price is more than the asset that you've taken over. It means the company who sold the business to you have considered some intangible assets in their business, and they've added more to the asset, because technically if you are to buy something, it means the asset should be in high value or should be of good value before you can take over them. But in a situation whereby the price is far more than the value of the asset, it means those who sold the company to you, they consider some aspects of their business which is going to help you to generate more income, and that intangible asset that they've seen or that they've sold to you is known as goodwill, because a goodwill will help the business to generate a lot of income. That's the standard, maybe the standard that the company has raised, and they see that one to be a goodwill. Okay, so a situation whereby the purchase price is way back or is more than the valuation of the asset, the difference becomes a goodwill. Are you good on that? So the answer for question number 17 is C. Okay, if you have any opinion, leave it in the comment section, and I'll be glad to review them. Okay, so question number 17, the answer is what? So the answer, I said the answer is C. Okay. Oh, sorry, let me clean it. The answer is C. Okay, the answer is C. Okay, so let's move on to question number 18. Question number 18. If opening debtors, what kind of currency is this? Maybe let's ignore the currencies symbol. Okay, if opening data is this 15,000 and credit sales is 60,000 and receipt from debtors is 58,000, what will be the closing figure? I think it's a very simple question, but let me help you. Let's open data account and see how we can record this. Data account, this way you can just use your calculator to do it, but then I want you to see how we can do the recording the debtors account. We are saying that the opening balance of the debtor is 15,000. Okay, so here we can, debtors as debit balance, so the balance brought down will be at the debit side. Balance brought forward is what? 15,000. 15,000. Okay, 15,000 at the debit side. Let's see the other information. Credit sales is 60,000. So when you sell goods to debtors, it should be debited to the account. And credit sales, so in the name of sales, you're going to debit customer's account. And it's what? How much? 60,000 or what? Yeah, 60,000. So 60,000. You sold goods to them, so we have to debit the account 60,000. Okay, let's move on to the next one. And receipt from debtors is 58,000. So they've made some payments concerning the amount that they are owing us, and whenever customers are paying us or debtors are paying us, you have to credit the account and debit cash account or bank account. So here, let's say receipt, let's assume it was cash. So cash 58,000. 58,000. Okay, write it somewhere. Write it nice, because this I have to see how I can do my best. Write it somewhere. So when you are done, you have to balance off an account. So let's see which side is bigger. Obviously, you can see that here is bigger than this. So 5 plus 0 will give us 5. Okay, we have zeros here. Oh, sorry, I was supposed to bring the 0 first. We have 3 zeros here. Okay. So 5 plus 0 will give us 5. Then 1 plus 6 will give us 7. So we have 75,000 to be the total balance, okay? 75,000 to be the total balance. To be the total balance, okay? 75,000. So let's track the difference. Here will be the balance carried down. Obviously, here is bigger than this. So you insert the difference here. Balance carried down. Let's use our calculator. So 75,000 minus 58,000 will give us how much? Give us 17,000. So we have 17,000, okay? By 17,000, right? 17,000, okay? So the balance brought down will come here. 7 down will be coming here. So 17,000, okay? 17,000. 17,000. So let's go. This is the balance brought down, and this is what the question is looking for. So let's see if you have 17,000 in the question. If you don't have, then there's something wrong. If you don't have, then there is something wrong with our solution. Let's see. Do you have 17,000? Yes, we have it. So the answer is option C, 17,000. So question number 18 is option what? Let me see. It's option C. Okay, so 18, the answer is C. So you see how we can, or you've seen how we got the answer. Very simple question. That's why I say you can use the calculator to get the answer. But I want you to know how we can get that using the T account. Okay? Let's move on to the question number 19. The purchases ledger contains, I think this is a repeated question. I think somehow question 2 also. The purchase ledger contains trade creditors account. The answer is A, because we said that purchases ledger is used to contain information relating to creditors, okay? So the answer is A. It can never be the purchases account. The purchases account is being found in the general ledger, okay? And the creditors control account, no. The trade data account, no. The answer is A, trade creditors account. The purchases ledger contain trade creditors account. Those that we buy goods on credit from, the information are found in the purchases ledger. Okay, so option A is the answer. Question number 19. The option A is the answer. So let's move on to 20 and see what we can do. So question number 20, you're saying use the information to answer question 20 to 22. Repairs of market stills, okay? Repairs of market stills, 400,000. I don't know the type of currency is this. If you know, you can leave it in the comment section, okay? I'm also ready to learn. We have licenses, okay? So I see licenses. We have purchases of furniture. We have property rates. So the question is saying that the total revenue is, yeah, so let's go through and see the revenue that we can get from these items. Repairs of market still, is it revenue or an expenses? No, this can never be an income. It's expenses. We are repairing something. Maybe they have a market and there's a particular section that they did repairs on them. So it's taking money out of the state. I think this one is under income and expenditure or public accounting. Yes, I think it's under public account. Yeah, accounting for public sector. Yeah. This one is under accounting for public sector. You see these things over there, I'm sure. So this one is relating to the local government and other stuff. Yeah. So we have licenses. Okay, licenses, the local authority, they do register vehicles and other stuff. and they will get money from it. So this 900,000 is a revenue. Okay, so put it somewhere. It's a revenue. Market is a revenue. We're going to use it. Purchases of furniture. No, purchasing of a furniture is not a revenue. It's expenses rather. We bought an asset, and the money is moving out of the local government, so it can never be an income. Property rates. Do you know property rates? This one they take it from the landlords. So those who are having house, they have to pay some tax known as property rates. Okay, and they have to pay it to the local government. And this is, I think, is a revenue. Okay, so the revenue that you've seen from here is 900,000 and 20,000, and the question is saying that the total revenue, and when you have to and for you to get a total of something is just a summation. So you're going to sum the 9,000 and that of 2,000. The other way is you're going to add the 9,000 and the 2,000 together. So let's take our calculator and do that. That's the only revenue that we have. So 900,000 plus 200,000, and we are getting 1.1. Okay, we are getting 1,100,000, or you can say 1.1. I don't know the type of currency. As I said, if you know, leave it in the comment section. I'll be excited to learn from you. Okay, so the answer is 1,100,000 something currency. So the answer obviously is B. So question number 20, the answer is B. Okay, so you've seen how we've got all these solutions. We did it together, and I'm sure you've understood it as you want it. If there's something bothering your mind, you can leave them in the comment section, or if you have any better opinion concerning what I've done, it is welcome. Okay, I'm ready to learn from you. Thanks for watching this video, and hope to see you soon. Please try and subscribe to our channel so that you don't miss any future tutorials. Share this video with your friends on all your social media. Thanks for watching.